Okay, I'm about 30 seconds early this evening. Hello, Rick. Thank you for joining the program. So I'm just going to wait. I'm just going to wait till it's officially 7 o'clock. Today was the end of the third quarter. And this is, excuse me. So this is Wednesday, September 30th. The third quarter has ended. We had a nice rally in stocks today, although um, a little bit of activity right toward the very end of more like mid-afternoon, around 2:25, 2:30. There was a comment from uh, Senate Majority Leader Mitch McConnell that they were still quite a ways apart. The Democrats and the Republicans were still quite a ways apart on a stimulus relief bill. I think a large part, probably at least 50% of the rally, was predicated on some statements early in the day that they were talking, which they had not been talking for a while until the last couple of days, and that there was some hope that they would be able to close the gap between a $1.5 trillion bill that seems to be acceptable to the White House and the Senate Republicans, and a $2.2 trillion bill, which I also heard late in the day, well after the market closed. I heard Kevin McCarthy say that that bill is almost identical to a bill that the Democrats had proposed a couple of weeks ago. So that is just uh, um, the markets were up very strongly at anywhere from, let's say, noon, 11:30, 12 o'clock, until about 2 o'clock, 2:25, and then they started to fade. Rallied again a little bit late in the day. Uh, Kind of a nice way to end the quarter. Cut the deficit for September over the last three trading days significantly, and um, and also very nice performance numbers from the major market averages, the Russell 2000, and of course the Dow Jones Transports, which just was had a phenomenal quarter, up 22%. I didn't get a chance to look it up, but I would think that's one of the strongest quarters on record for the Dow Jones Transportation Average. I might try to drill down on that later this evening and or tomorrow. But let's just take a closer look where the day started. Of course, we had the ADP. Um, okay, so we had the debates last night, right? I think many people were very frustrated trying to watch the debates. It really turned into uh, a little bit of a shit show, to put it mildly. And I think that Chris Wallace lost control of the whole, event very, very early on, and it just spiraled out of control from there without getting into who won and who didn't win. I think the clear loser was Chris Wallace. It was just, it was an amazing thing to try to watch. Yes, yes, Lise, it was a very nice way to end the quarter. Hi, Maddie. It's so nice to have you in the chat this evening. And if there's anyone in the chat that is a first time watcher or has only watched like occasionally and you are not a subscriber yet, please hit the subscribe bar on YouTube. I'm at 98 subscribers, looking to get to 100. Certainly not a monumental number in terms of a lot of YouTubers, if you want to use that word. But I am very happy with the support that I get from people who are consistent viewers of the broadcast and who participate in the chat. I find the questions in the chat to be uh, very additive to the content of the show. And this is my YouTube channel. It's called The Anderson Report. Hit the subscribe bar, hit the little bell next to it, and you'll get notifications of when the next broadcast is. I try to schedule them and put them in the system 3 to 4 hours in advance. Sometimes, it's a little bit less than that, but I try to let people know as soon as possible when I'm certain that I'm going to be doing a broadcast. It's usually at 7 o'clock. Sometimes it's at 9 o'clock. Uh, and once in a while on the weekends, I've gotten actually good responses to the Sunday night shows, and we'll try to keep that up. I also broadcast on Periscope on TJ Anderson 12, and my Twitter handle is TJ Anderson 1. So if you ever have thoughts later in the evening, or if you watch the replay of this and have a question or two, please feel free to shoot me a question on Twitter. So uh, we had the debates last night. I don't think it was that much of a factor for the market, although stock index futures were down close to 1% in overnight trading. And then we started the day with gains of about 1%. And then after the ADP private sector job numbers came out at 8:15, those gains started to gradually improve. And uh, the rally really got kicked into gear after there was some a little bit of positive banter that we may be a little bit closer to a stimulus 4.0 package that would include checks, some additional unemployment insurance, similar to what Trump did by executive action a few weeks ago. I believe it was just before or just after Labor Day. And um, I think there was also a couple of positive headlines on the from a couple of the potential vaccine manufacturers on progress that they were having. I believe that Moderna had some positive comments, and I had thought that Regeneron had positive comments early last evening, but that stock started the day down about uh, 12 or 14 points. So maybe I had misinterpreted what Regeneron said, but Moderna definitely had some positive comments on their vaccine trials early in the day. So we were up as much as 2% during the middle of the day, maybe from 11 o'clock to 2 o'clock. The Dow was up well over 500 points, bouncing around quite a bit between up 450 and up 550. The S&P was up 1.5%. Nasdaq was up maybe a similar amount. Even the Russell 2000 was up, at least 1%, 1.5%. And then at about 225, the market sold off significantly in a very short period of time. Never really went negative, although I believe the Russell went negative for a while. And Mitch McConnell, Senate Majority Leader, said we're really quite a ways apart. So that kind of put a damper on the part of the market that was rallying based on enthusiasm over a potential stimulus package. Now, it's still very possible that they will get something done. I don't really think that McConnell was making an irresponsible comment, but I think that he was either answering a question or just coming out of the Senate and going, you know, a little bit of a microphone, maybe a little bit of a light Q&A, and somebody asked him how the negotiations were going, and he said, "I think it's very fair to say that we're still a ways apart." Now, that can be closed before the end of the week. We'll just have to see. But the markets still finished the day with nice gains. The Dow gained over 300 points, or 1.2%. The S&P 500 gained a little bit less than 1%, 0.8%, 27 points. The uh, and the Nasdaq Composite gained about 80 points, 82 points, or 0.75%. So the Nasdaq and the S&P 500 pretty much the same. The Dow had a bigger rally. That fluctuates from time to time. The Russell 2000 pretty much flat on the day after being up close to 1.5%. That was one bothersome development. It sold off much more strongly after the McConnell comments than the other averages did. And the Dow Jones Transportation Average, which has just been on fire for the entire quarter, even still with gains during the month of September, although a lot less than they were earlier in the week. The Dow Transports actually ended the day in negative territory. I think they were probably negative most of the day. The transports down 70 points, or just over 0.5%. So, for the month of September, the uh, the Dow Jones Industrial Average had a loss of 2.3%. For the third quarter, it was up 7.6%. The S&P 500 had a loss just less than 4%. Okay, 3.9%. For the third quarter, the S&P gained 8.5%. The Nasdaq Composite, to give you an idea of how really stretched out the Nasdaq Composite was at the end of August, and particularly after September 2nd, the Nasdaq lost 5.2%. It was the largest decline in September. It had the largest decline in September of any of the major averages, including the Russell, and it had the largest gain for the third quarter, up 11%. Okay, the Nasdaq closed at 11,167. The 50-day moving average is going to be, that's about 140 points, a little over 1%, a little more than 1% above its 50-day moving average for the Nasdaq. Now, the Russell 2000 was only gained 3 points on the day. In September, it lost 3.4%. It did have a stretch where it acted very well in September, when the market rallied off the big sell-off that it had on September 4th, 5th, and 6th. So the Nasdaq lost 3.4%. It gained 4.6% for the quarter. And I mentioned the transports. That finished the month with a gain of just less than 0.5%. The Dow Jones Transports gained 22% in the third quarter. Now, I'm going to do something a little bit different. And I'm going to, so September was a down month. But I really think you can take the month of September and explain it away by how exaggerated to the upside the major averages were, particularly the S&P 500 and the Nasdaq, at the end of August. And then also, the market really peaked on September 2nd, when the S&P 500 closed at 3580 and the NASDAQ composite closed just above 12,000. Now, I'm not saying that those levels can't be attained again before the end of the year, but I'm just saying for this last stretch, that's where the market peaked, okay, on September, after September 2nd. So let's just keep in perspective a couple of things. Excuse me. Um, from Friday, August 21st to Wednesday, September 2nd. That was 8 days because Labor Day was late. So Labor Day was on September 7th. Um, so that stretch, that last week in August, and then uh, the up until Wednesday, September 2nd. So the last day of August was Monday of that week, Monday, Tuesday, Wednesday, in addition to the week before, the S&P gained 5.4% and the Nasdaq gained 6.6%. That was fueled a little bit by the big rally from Tesla and Apple. Both, I don't know what percentage Tesla gained. It was probably even more than Apple, but Apple gained 25% in the month of August after they announced very early in the month that they were going to split their stock 4 for 1. Okay. I'm just trying to remember if I got that right. Now, Tesla said it was going to split its stock 5 for 1. Both stocks went on this incredible rally that also took a lot of other stocks in what we've always been calling the internet traffic trade along with them. And then you had that kind of final push from that included Monday, August 24th through that week, inclusive of Monday, through Wednesday, September 2nd, when the market peaked. The S&P 500 gained 5.5%. The NASDAQ gained just over 6.5%. So the NASDAQ, then we had a very sharp 2-day sell-off, although the selling regained, the market regained regained a lot of its losses on that Friday. So the market sold off hard on Thursday and Friday. Thursday at one point the Dow was down close to 4%. It was down over 1,000 points. It finished the day down a little over 800. I don't really have the numbers for the S&P, but it was down hard on Monday. It was down very hard. It was down hard on that Thursday, very hard on that Friday. Not really a news related event, but just and I think that a tremendous amount of shorts in the market had covered over that last push the last week in August. So when there's very few shorts in the market, there's very few bids on the way down when you get a sharp sell-off. Because typically, if there were a lot of shorts in the market and the market started to sell off hard, a lot of the shorts would use that opportunity to cover some of their positions. And I'm sure there were some, but I'm sure there were some, but not enough to stop the market from that 4% ballpark sell-off that it had on September 3rd. And what's interesting is the S&P, after that sell-off on September 4th, that was a Friday, the S&P had closed at 3427. Okay. Now keep in mind the old high from February 19th was 3386. Okay. The S&P closed tonight at 3363. Now it had made a number of new highs in late August. But the old high from February 3386, I think that's a number to make note of. So on September 4th, we had a sharp sell-off. September 3rd, September 4th, where the market sold off almost everything it had gained over the prior 8 days. Okay. On Friday, August 21st, the S&P 500 closed at 33.97. Okay. It rallied hard for 8 days, gained 5.4%, and then lost almost all of that. September 3rd and 4th, the S&P closed at 34.27, 1% above where it was on August 21st. I wish I could show you the chart. Hopefully, sometime next week, I'll be set up to put charts with my presentation. So, the intraday high early in September when the market rallied off that recovery, 34.25 on both September 9th and 10th. The intraday high for the S&P on September 16th was 34.29. Today, I didn't write down the intraday high and I wanted to, but I think the intraday high today was around 30, a little bit above 3,400. And look where the S&P had closed after that very sharp sell-off, September 3rd and 4th, 34.27. NASDAQ, very similar price action. NASDAQ on August 21st closed at 11,312. It then rallied 6.5% over 8 days. Then it lost almost exactly 6.5% over 2 days because the NASDAQ closed at 11,313, 1 point above where it had closed 2 weeks earlier. That included a 6.6% rally to the upside and a almost identical decline to the downside over 2 days. So the NASDAQ right now, 11,167. The intraday high, 11,278. So both the S&P and the NASDAQ are failing at resistance levels just almost identical to where they had closed both on August 21st, before we had this mini little parabolic move higher over 8 days, and also where they settled after that very, very sharp 2-day sell-off Thursday and Friday, September 3rd and 4th. I know that's a lot of numbers. I know it's a lot of dates. I know it might lose a couple of people, but I'm just saying it as a reason why the market decline in September really doesn't bother me, because we were at such an exaggerated level coming into September that we had gone too far, too fast up in August and then pushed even higher the last week in August and the first 2 days in September, that I just think you just don't look at these numbers. This for the losses for September, I'm not that bothered by them, but I think it's very interesting to look at where the market turned today, even though it turned on some comments from a high government official on a potential stimulus deal. The reality is it hit intraday resistance. The S&P hit intraday resistance today at very similar levels that it had 3 or 4 other times this month, and the NASDAQ pretty much the same. So we got to get to feel that there's another big leg in this rally, and it very well might happen. We got to get above where the market was on August 21st and where it settled on September 4th after that very sharp 2-day sell-off. Even though it wasn't a gap on the chart, there were a lot of people that didn't really have an opportunity to sell at those levels, as represented by the indexes. There's a lot of stocks that look very different. So, right, yes, JK, we were positive for the third quarter. The Dow gained 7.5%. The S&P 500 gained 8.5%. The Nasdaq gained 11%. The Russell 2000 gained 4.5%, and the transports just crushed it with a gain of 22%. That's why I'm not worried about the decline in September, because the rallies, the rally in July and August, and particularly late August, was so strong. It was inevitable that we were going to have a little bit of correction at some point before the end of the year, and it happened almost right out of the chute in September. There was a 2-day follow-on blow off the first 2 days of September, and then boom, that 5.5 to 7% correction on the way down from both the S&P 500 and Nasdaq and the Dow and the Russell and all the other averages. I'm just using the S&P and the Nasdaq as examples because they're two big, benchmark averages for the market. So there's a number of comments in the chat that I want to get to. Nice way to start the quarter. Yes, it was. Sold my position in ENPH. I'm not familiar with that stock. Mark Johnson is here. Thank you very much for joining the pal Chuck. I think it's great to have you in the chat. Lisa, is it Lisa? Lisa Lee. Nice way to end the quarter. Yes, it sure was. I see selling this month due to the election. I see volatility due to the election. Whether or not it will be to the downside, I'm not totally sure. I think that if we get a push, the only way we won't have a lot of volatility and maybe some market anxiety going into the election is if the polls start to show someone with a increasing lead or increasing momentum significantly, then you might get a feeling that, oh, look, Trump has really got this thing now. All the momentum's behind him. Or, you know what? Trump he's just got the deficit's too big to make up and Biden's going to pull this out. Then the market might trend in in one direction or the other. What do you think of Chicago PMI? Yeah, so the Chicago PMI, you know what? I'm embarrassed to say that I missed that number. We did have the ADP jobs report today. They gained 800 and what was it? 875,000 jobs. It gained 800,000 jobs. The expectations were to gain 600,000 jobs. That's better than expected. That number has disappointed the last couple of months. Whether it's or not, that means the Bureau of Labor number that comes out on Friday, which is typically referred to as the jobs report. It's really the non-farm payroll report and the unemployment rate. It's hard to tell if the ADP number beating by 30% or 200,000 jobs ahead of consensus means that this jobs number on Friday will also be a beat. The ADP number has been a significant miss each of the last 2 months for August and July. And for both of those numbers, 2 days later, the BLS numbers easily beat consensus. So I'm not going to say that this means Friday's jobs report is going to be a great number. because the ADP report has not been a very good predictor the last few months. So I'm just going to look one thing up. Bear with me a minute. Oh boy, I can't type. Somebody is saying here that the Chicago PMI number was a killer, and uh, JK, can you put in the text what that Chicago PMI number was? I'm embarrassed that I missed it. Uh, what do I think of Tesla heads of third quarter numbers? Shucks, I'm not. I just don't know. I got to be real careful about how I talk about single stocks. I'm not a registered analyst. I am registered with FINRA, and they don't like it when people that are not registered analysts give opinions that can be interpreted as buy or sell recommendations on any public forum. Um, there we go. So the we did get the nice ADP number. We did get the final revision for third quarter. I'm sorry, the third and final revision for second quarter GDP. It had been at negative 31.7. It was revised just slightly better than that, uh, to 30 minus 31.4. To me, that's almost an unchanged event. And we did get the Chicago PMI number. And bear with me because I'm so annoyed that I didn't write it down. I'm going to look it up. Oh my God. You are right. JK, you got to excuse me. I don't know what a lot of your real names are, but I'm just going to call you JK. The Chicago PMI number came in at 62.4. That crushed, and I mean crushed, the consensus of 53. The prior month was 51.2. That is just an over the top, off the charts report for the Chicago PMI. Now, I will also mention that the National ISM Manufacturing Index is going to come out tomorrow at 10 a.m. The consensus for that is 56. The prior report was 56. 56.0 consensus, 56 point from last month, August. Consensus 56.0. One other group has the consensus at 56.5. I would say that with the Chicago PMI coming in almost 10 points above its consensus and more than 10 points above what it did in August, and I haven't read the details of it yet, I would say this national ISM number that comes out tomorrow at 10 a.m. is probably going to be a good number. Will it cause as much of a look? If it comes in at 60, it's just people are just gonna. It'll be a jaw-dropping number, and you will have people from. You'll have Larry Kudlow on TV within 30 minutes talking about how it's clear evidence of a V-shaped recovery. So we'll see. There's a lot of other data coming out tomorrow. Also, we get personal income and spending. Uh, we get the PCE prices. We know there's pretty much no inflation. Although grocery prices might be up a little bit, I see fewer and fewer 2-for-1 deals and really, really significant price deals at the grocery stores, especially for items that have been low on stock and that they've had trouble restocking. And clearly, a lot more people are eating at home, cooking at home, and the grocery store volumes are very, very strong. Even though the restaurants have opened up, a lot of outdoor dining, a lot, some places, even New York City, as hard as it is to believe, going to 25% capacity, um, that's still going to, you're still going to have a tremendous amount of people um, eating, cooking almost exclusively at home compared to what would be normal. So you might have grocery store prices up a little bit. We'll get other data also. We'll get the initial claims report at 8:30. The consensus for that is 850,000. We've been below a million for a number of weeks now. It's very hard to break that 850 level. I'd love to see it happen. I think we're stuck above that level because of how slow we've been to lift capacity constraints at restaurants and other indoor facilities. And that just has, put more people that, you know, have been a lot of people get, I think a lot of people get laid off or they're out of work. It takes them a couple weeks to file because they think, well, maybe it'll just be for a few days. We'll also get construction spending. Um, and then Friday, of course, we'll get the jobs report from the Bureau of Labor Statistics with the unemployment rate, average hourly earnings, and then we'll get factory orders and we'll get the final University of Michigan consumer sentiment report. Uh, Consensus for that is 79. It was 78.9 last month. Now, the conference board number came out earlier in the week. Consensus was 90. It's just calibrated a little bit higher than the Michigan number. It doesn't mean that theirs is that much stronger, but it was very strong in September. It came in at 101 when consensus was 90. That's a big beat for a consumer confidence report. Let's see if that University of Michigan number, although they had already reported earlier in the month and then they revise at the end of the month. Let's see if that we get an upward revision there. Rick has a question. When will Amazon get added to the transportation index since they will be usurping FedEx and UPS? They are never going to get added to the Dow Jones Transportation Average or the Dow Jones Industrials, which is probably where they really belong, until they split their stock, let's say 10-for-1. Why? Because the Dow Jones Industrial Average and the Dow Jones Transportation Average are arithmetic averages. And there was a day last week or the week before when Amazon went up 168 points, which was like 3%. Now, if I don't know what the divisor is for the transportation average, but if Amazon went up 168 points and it was in the Dow Jones Industrial Average, that would be responsible for a 1,000 point gain in the Dow Jones Industrial Average. They are not going to put a $1,000 stock, even an $800 stock, or probably anything above 500 in the Dow Jones Industrial Average. Now, if they split their stock 10-for-1, then it would be an interesting conversation or point of speculation. But I can't see it until they do something like that. Apple went into the Dow Jones Industrial Average in early um, 2015, might have been late spring 2015. And in the fourth quarter, I believe the fourth quarter of 2014, they split their stock 7-for-1 when it was an $800, like a $750 or $800 stock. So I don't really think it was a coincidence that they split their stock 7-for-1 to make it just over $100 stock, and then they got added to the Dow Jones Industrial Average. Um, uh, within 6 months, maybe a little bit longer. Uh, and of course, they were a $1,500 stock. What were they? Were they 15? I can't remember, but they split their stock um, again recently. So the impact their daily moves on even on a percentage basis are going to be smaller point moves, and it's going to maybe take some of a little bit of the volatility out of the uh, Dow Jones Industrial Average. There's still some big high price stocks there. Boeing used to be a $300 stock. It's now like about 170, 180. There's a couple of others. So we're going into the fourth quarter. We're a month and a couple of days from the election. The point that Shucks made earlier, will there be volatility? It might have been somebody else. I see a lot of selling in October. Well, we had that in 2016. We had a lot. The market was taking a hit going into the election, and started to rally a little bit before the election. And then, of course, very famously, when it was really announced that 2 o'clock, 3 o'clock in the morning, that Trump had won, the S&P futures traded down as much as 5%. Totally reversed. Began to reverse after his speech that he gave at 3 a.m. and then opened about unchanged the day after the election, and pretty much rallied all day long. I believe it was the strongest percentage gain for the Dow Jones Industrial Average on the day after the election, either the strongest or the second strongest on a percentage basis. We'll save the predictions for on this year until we get a little bit closer. I think that Team Trump is fairly confident, and I found it curious that Biden was at an event in Ohio today, which is a state that Trump won by between 8 and 9 points 4 years ago. Although there are some polls showing that state to be very close, although political inside people in Ohio are quite certain that Trump has that state locked up. So I found it curious that Biden was there today, but we'll see. That's, a little over a month away. Anyways, that's about all I have right now. A great third quarter for stock market averages. We'll likely have some volatility coming in, to the fourth quarter starting tomorrow. I think what we've got going for us is economic data is trending better. The headwinds are if the talks on a stimulus package completely fall apart, the market will certainly have a knee-jerk reaction to the downside. And the big uncertainty is really when, and it's really when, not if, but when we get definitive results from at least one vaccine manufacturer. And it could be two or three, because there could be two or three manufacturers that get approval, and then what the distribution plan looks like to get that into the hands initially of the people that are the most vulnerable, and then everybody in the country that wants it, and what will they, and potentially um, other parts of the planet. So those are three big issues still: the economy, the economic rebound, the economic data continues to improve a little bit. You've got some election uncertainty. You've got uh, some um, questions as to the timing of the virus. And you've got Big Fish. It's great to have you in the program tonight. Thank you very much. And of course, you've got the potential, if a lot of these states are really going to be counting votes as late after election day of uh, September, November 10th in case of Wisconsin, November 17th in the case of Michigan. Totally ridiculous. If that causes an uncertain outcome to the election, the markets will not take that very well. So, I want to thank everybody for watching and subscribing. If you're a new watcher, please subscribe to my YouTube channel, The Anderson Report. Hit that red subscribe bar under the video. Hit that little bell. You'll get notifications on when the next show is. And I also stream on Periscope, TJ Anderson 12, and my Twitter handle is TJ Anderson 1. So thank you, everyone, and we will be speaking with you again tomorrow evening, the first day of the fourth quarter. Have a great night, everyone.